Good evening and welcome to the Financial Week. I'm Javon Keys. NCB Financial Group ended its 2020-2021 financial year with improved revenues but less profit. The company gave its year-end financial position at an investor briefing this morning. For the fiscal year ended September 30, the NCB Financial Group says while it earned $12 billion more than the 2019-2020 financial year, profits fell.
The group reported net profits of $20.1 billion for the financial year, with $14.2 billion attributable to our shareholders, representing a 25 or $4.9 billion decline from the prior year. Net operating income grew by 11%, or $12.3 billion to $121 billion, our highest in history.
Deputy CEO of the NCB Financial Group, Dennis Cohen, gave a further segment breakdown of inflows.
Banking and investment activities recorded $98.2 billion for the period, improving by $22 billion or 29%. Gains from foreign exchange and investment activities increased by $14 billion, more than double the 2020 financial results. This was due to significant market recovery compared to the prior year. While capital markets have not returned to post-pandemic levels, we continue to see general improvement, albeit uneven across the region.
He says the company's insurance business declined during the year.
The net result from insurance activities declined by $9.5 billion or 29%. Much of this reduction is related to the impact of COVID-19 on consumer and business activity. Our life insurance business in Jamaica has been experiencing increased mortality claims on account of low COVID vaccination rates, while our Trinidad and Tobago business has experienced persistency challenges on account of the economic impact of COVID-related lockdowns.
Meanwhile, the group has decided not to declare dividend. Mr. Cohen defended the decision.
Given the challenges that we're facing, the consensus has been that the best long-term interest, or what's best for the sustainability of the organization, is in fact reinvestment. We have seen significant improvement in the environment as the pandemic is waning in certain locations. The vaccination rates improving across the region. What I will say is that the prospect for a dividend payment going forward is looking a lot more promising.
It's now costing an average $154.89 for $1 US. $125.73 is the going rate for the Canadian, $209.72 for the pound, and $182.63 for the euro. Meanwhile, the JSE index lost 2,810 points, while the junior market index gained 5 points. Advancing today were JMMB Group 7.5% shares, G West Corporation, Stanley Motor Ordinary shares, First Rock Capital Holdings US dollar shares, and Medical Disposables and Supplies Limited. While on the losing side were Cygnus Credit Investment, Knutsford Express, KLE Group, Radio Jamaica, and Mayberry Investments. And that's it for the Financial Week. I'm Javon Keys. Regional and international news are after the break. Stay with us.